Hello everyone. This is the pre-market report video for today, March 1st in the Indian stock market in terms of Nifty and Bank Nifty. Before into the topic, thank you very much for all the support yesterday. I'm feeling much better today. Anyway, let's start. Yesterday, because of the Nifty expiry, to some extent, Nifty movement was controlled by banking and financial stocks. In other words, Bank Nifty. Nifty opened a gap down of 10 points and it maintained near the previous day closing till 12:30. Then during 12:30 to 1:30, it started to slide due to the negative European market opening. And in the next 15 minutes, there was a severe selling in Bank Nifty which pushed the Nifty towards 17,250. But the regaining of banking stocks made the Nifty to close above 17,300. Overall, for the 8th straight session, Nifty closed negative. Yesterday, both Sensex and Nifty was 0.5% down. However, Bank Nifty still managed to close flat. Sector-wise, metal, oil and gas, healthcare, IT were down by 1 to 2%. On the positive side, realty and power were increased over 1%. As a overall, it's not as bad as Monday. For example, on Monday closing, the advanced decline ratio was 1:4, which means for every one stock advance, 4 stocks were declined. That on yesterday closing improved to 1:1, which means for every one stock advance, 1 stock were declined. Regarding institution activity, I don't know when FI is going to stop selling. Yesterday, the net sold shares worth approximately 4,560 crore rupees. As I said, I don't know why. Yesterday, their trading volume was almost 3 to 4 times of normal volume. Normally they trade both gross buy and gross sell for 6,000 to 7,000 crore rupees. Yesterday, they gross bought for 18,500 crore rupees and they gross sold for 23,100 crore rupees. Luckily, DII equally net bought in the market for over 4,600 crore rupees, or else it might be a disastrous yesterday. Then after the Indian market, US market opened relatively negative to flat and all 3 major index traded each in their own direction. Throughout the day, S&P 500 traded mostly flat and in or around slight positive and negative, whereas Dow Jones slides continuously and closed negative. However, Nasdaq traded most of the times in the positive region. Anyway, then finally all settled on negative. Yesterday, Conference Board released the consumer confidence data. On the good note, it started to fall and the data comes as lowest value of 102.9 against expectation of 108.5, which means lowest level since November. This is positive, but the investors were still too much worried about inflation and further interest rate hike. Because of that, there was an indecisiveness in the US market. The next consumer inflation for February month is scheduled to release on March 14th. So till that time, I think global market will be like this only. Anyway, in the end, Dow Jones down by 0.71%, S&P 500 down by 0.3% and Nasdaq 2 down marginally by 0.1%. Surprisingly, US VIX reduced by 1% to 20.7. In terms of tech stocks, Facebook increased over 3% since they said that they formed a new product team to create a new AI product, whereas all others closed marginally mixed. Then regarding dollar index, there was a report released by Reuters that Saudi Arabia is going to increase the official selling price OSP in the April month for the Asian buyers. For those who don't know, OSP, official selling price, typically set by each state-owned oil company on a monthly basis after an official meeting to the long-term customers, not on the open market. This made the oil price to increase over 1.5%. At the time of this video, WTI crude oil is trading at $77 per barrel and Brent crude oil is trading at near $83 per barrel. Coming to Indian ADR in US market, only Infosys closed negative, whereas Wipro closed flat. In case of bank ADRs, it increased around 0.8%. Regarding SGX Nifty at 3 am Indian Standard Time, it closed at around 17,366 level, which means it's kind of indicating gap down of another 40 to 50 points. Regarding India related, yesterday in the aftermarket hours, Ministry of Statistics released the Q3 FY 2023 GDP data. If anyone fancies seeing the government official published report, I'll provide the link in the description below. Please have a look. Now regarding the data, it comes as 4.4% against the analyst expectation of 4.6%. This is huge negative since in the last financial year same time India grown at 5.4%. Now that reduced to 4.4%. I mean, Indian economy only grown by 4.4%. There is a slight positive there. In the same report, despite the slow Q3 growth, they projected the full year growth as 7%. Here I don't know how. I'm guessing they expect the country to grow much faster in Q4 to compensate the slowness in the Q3. Will it happen? Only time has to answer. As a summary, US market closed to negative, IT areas too closed to negative, SS Nifty indicating a 40 to 50 points gap down. The only positive thing is banks area which closed to positive. Let's see. Then about the things to look out. Today throughout the day, various countries' manufacturing PMI data is due to release on their respective timings. Coming to technical, as we discussed earlier, Nifty closed negative for the 8 consecutive days, forming a bearish candle for the 9th consecutive day. Obviously, this is not a good news. Yesterday, for the first time since October 10th and 11th, 2022, Nifty broke the 200-day simple moving average and also broke the big budget day low. If we take the single day, Nifty forms the medium candle with long upper and lower shadow. What this candle is conveying is, there was a recovery in the start, but then comes the strong selling pressure. However, by the time of closing, buyers try to regain the control, but still they cannot. So now 17,350 will be the immediate trigger level. If Nifty trades below 17,350, then the correction is likely to continue and it could slip till 17,250 to 17,200. If Nifty moves above 17,350, then we can expect it to move up to 17,425 to 17,480. The only positive thing at present in Nifty is the RSI value. On daily chart at present, the value is 30.5. So it is very close to the oversold region, but not yet in those space. Moving on, at present, Nifty broke all the moving averages such as 5, 10, 20, 50, 100 and 200 day, both simple and exponential one. So as a moving average summary, it's a strong sell signal, and same for technical indicator summary as well. The another minor positivity is the technical indicator stochastic RSI is indicating oversold state. Now coming to Bank Nifty, on daily chart it forms a bearish Harami candle formation but close to forming a bearish Harami cross. If this formation forms in the upward trend, then it's considered as bearish reversal, but now it forms in the downward trend. So we don't have to worry too much. Now Bank Nifty is not as negative as Nifty. Overall, at present, Bank Nifty is in a range bound and it forms a doji kind of pattern and thus indicating the indecisiveness. In case of moving average and technical indicator summary, the status is same as Monday closing, which means just a sell on moving average summary and strong sell on technical indicator summary. From option change in open interest, yesterday there was small number of put options were added, and again there were some put options unwinding taken place between 17,350 to 17,600, and there are good number of new call options were added at 17,300 to 17,800. 17,400 got the maximum new call option open interest. So 17,400 is the immediate resistance to break. The put call ratio further dropped to 0.51 from 0.57 day before yesterday. Then from overall options open interest data, the maximum put option open interest is at 17,000 followed by 17,200. Thus 17,200 is the immediate support and 17,000 is the good strong support. Then in terms of Bank Nifty change in open interest, literally no new put options were added and there are put option unwinding taken place between 39,000 to 40,000. Significant new call options were added at above 40,200 mark. From open interest data, the maximum put option open interest is present at 40,000 followed by 39,500. Thus 39,500 looks like a strong support. And the maximum call option open interest is at 40,500 followed by 41,000. So 40,500 is the immediate resistance and 41,000 is the strong resistance. In Bank Nifty, the put call ratio is far better than Nifty. It's 0.8. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm. It will also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.